The S&P 500 hit 6,200 points for the first time in history. A blow-off top, no doubt. We're seeing this across the board, and I've got several theories to run through with you today with major blow-off tops in almost all markets across the globe. We've already started to see these play out. More details coming up in today's video. Hit the like, subscribe to the channel if you are new here. Otherwise, you know the deal. We're the home of macro cycle analysis. Now I've got the stock markets, of course, Bitcoin, real estate, metals, altcoins, and currencies as well. And at the back of your mind, as we're going through this, just ask yourself, how are you investing through the final phase of this bull market peak before a collapse? And there's always a collapse, but I'm not calling that yet, as I haven't been for the last several years. Lots and lots of signs to suggest that we still have further upside to go. Let's take a look at the S&P 500 today as it hits a new, fresh, all-time high. This was for the S&P 500 futures, 6,200 points for the first time in history, 28% to the upside since the tariff low. And we're coming up to a few deadlines in the next week or two from Trump and all of the tariff talk across the globe with China, Europe, India, UK, you name it. There are a few of those coming up that they have to start to agree on. Now, we're also seeing this with the NASDAQ, also hitting new, fresh all-time highs, as I pointed out in a couple of days ago on the channel, if you were following here. This is, in my opinion, good news for the bulls for Bitcoin. Because generally, when we see the NASDAQ head higher, we typically see more of that liquidity come out into the market as well. And Bitcoin is usually the recipient of that extra liquidity. So we've got lots of charts to have a look at, but in terms of this cycle itself and where we're tracking from and to, it is looking a lot like, nearly 20 years ago, before the peak, before that big blow off top that we saw with real estate in the US, and then everything came crashing down. For the S&P, covering just the S&P here, looking at the cycles going back to 2005, we're currently in 2025. You can see we had the drop off in 2005 into this low here in April, and then the market started to rally out. For quarter three, that summer period for the Northern Hemisphere, it was a choppy sideways market, but there were times where the market did run higher. So I think we potentially are still running similar to the time frame back before the GFC. Bit of a drop off either August or October, but then things become clearer towards the end of the year. So how is all of this happening, and what does it mean looking at this last 20 years? Well, you had the stock market crash of 2008. You might be familiar with a few of these terms, so we don't need to go through it in great detail, but we're seeing this happen again. You have the subprime mortgage crisis, the credit crisis, credit default swaps, mortgage-backed securities, which all led to that extra liquidity into the market, along with the rates being cut and then increased again. So the interest rates going down and then increased again towards the end because of just how much money was out there. We're seeing similar things with more of that liquidity coming out, whether it's the US printing, which we know Trump has looked at his big, beautiful bill for nearly $4 trillion, which would increase the debt by 10%. That is insane. On top of that, interest rates remain where they are. Markets are still going up. And if we do get some cuts, more liquidity into the market as well. And this federal housing FHFA announcement here, looking at issuing directive to consider cryptocurrency as an asset in risk assessments. This is for Fannie Mae and Freddie Mac, essentially allowing them, if they choose to, so order issuing directive to consider, so it doesn't mean it has to be in, but it's directive to consider cryptocurrencies as an asset for single family loans delivered to Fannie Mae. So essentially you could put up your crypto to go and buy real estate. This is I think will send things over the top. We'll see prices continue to go up, even though it seems insane where the prices are currently at for the US with their housing market. Obviously Australia for our housing market as well. It's insane. And the affordability just continues to get further and further out of whack. But there is still more ammunition and more things that the government is throwing at the market to keep them propped up. That's one of the biggest things here for the cycle repeating. Now, it seems like things are going back to normal, and I say quote unquote going back to normal. We have the deadlines coming up for the tariffs that Trump had put on and taken off again. So his taco trade there. Trump says he's signed a trade deal with China. So this is just out in the last few hours. We haven't heard anything from China to say this yet, but maybe it is by the time you're watching this. Trump says he signed a trade deal with China, teases an India agreement. So as I said, things might be going back to normal. But they also said they've done one with the UK. However, they're not a strong trading partner, so it's not as big of an impact. In terms of the EU, they're considering lowering the tariffs, and we've heard from the EU as well, saying that they're ready to talk about absolutely anything and everything, words from their mouth, but they do understand that they might not come to an agreement yet. That deadline, I believe, was around the 9th of July. Therefore, we have about a week and a half to go there. So again, more things for the market to consider as being positive, I guess, in this wall of worry, this ever-building wall of worry, where we've seen tariffs and wars and so on. We just literally had the war 2 weeks ago start, Israel bombing Iran. That was back here on Friday the 13th. From the low to the high is now nearly 6% from the first bombs. So the talk at that time was around, this time is different. Wars are coming. This war is different. Has Israel ever bombed Iran in this exact way? That's not the point. The point is the wall of worry, and there's always something going on to make you think that this time is different and the market is going to collapse. And I've pointed out many, many times before that we should never fade the 18-year cycle. The 18-year cycle has been around for over 200 years. It keeps going, and in the face of all of the uncertainty that we see with the markets. In terms of the charts and the data, as I continue on with some of the major blow-off top stories here, I'm looking at the NASDAQ now, as this to me relates quite significantly to Bitcoin. NASDAQ 100 rallies from negative 20% to a one-year high within 3 months. So a few criteria there that the NASDAQ has to meet in order for the data points to show up here. This is from Subitrade. The number of times that this has happened, 35 years, is 6 times. We're into our 7th now. 100% of the time, of course, we're not trying to look for 100% hit rates, but this is what the data is saying, is that we would see the market higher 1 month later, 2 months later, 3 months later, 6 months later, 9 months later, 12 months later from this particular signal. So the NASDAQ had collapsed 20%. Then it has rallied to a new one-year high within 3 months. So it's getting a little bit technical there with the criteria. But where you can see this occurring is after the 1990 recession, big correction into the low, big rally out of it, so a V-shaped recovery. After the GFC, big dump, big rally out of it. 2020, so 2020, obviously COVID, big dump, big rally out of it. And then 2022, we had the fears of inflation and interest rate rises, yet the market has obviously recovered from there. For all those years, we've been talking very heavily on the channel here about the market going up. And I was obviously criticized and laughed at a lot in 2022 and 2023 that it was different this time and the market had to collapse. Of course, who's doing the laughing now? But the main focus doesn't matter about who's right and wrong. It's always about making money in the market. Hit the like button if you like making money in the market. Okay, the other 2 times here, the 1998 and then the 2003 signal. So 2003 came off the back of the dot-com bust and the market rallied from there. You're still getting gains, not as significant as obviously the dot-com era and the boom. And then 1998. That one I think is potentially what we're most closely to now with the correction, big correction there, and then the market basically rallying up into this blow-off top. What could fuel that? Any number of things. AI seems to be the biggest one at this point. In terms of the chart itself, we can see that we're still tracking very similar to what happened 5 years ago as well in 2020. That's what this red line is here. Pretty well on the money for the massive correction. The higher low, you can zoom in and see it hit that almost dead on, and then where we currently stand. So this takes us further and further up over the coming year. To me, it seems insane. I'm just going to keep following the pattern and the fractal as we have seen since I put this on back in April. As I'm reviewing it now, it just seems more and more crazy that we almost had the exact same thing where the market consolidated in an upwards fashion and then popped higher at almost the exact same time as it did 5 years ago. Nonetheless, we're not trying to look for exacts here. The general direction, that's what we're looking out for, is further upside here for the NASDAQ. Yes, you're going to have many other reasons why people would start to point the finger at things like global liquidity and things like that, why the market's going up. Nonetheless, the fractal has continued to follow suit here. So we're taking a look at the blow-off tops. That basically does the stock markets. The S&P 500 reached new all-time highs again. NASDAQ has also reached new all-time highs. Doesn't mean it's going to be straight up. And because of the excitement with the new all-time highs, maybe we do see a correction in the coming days just to sort of cool things off so it can consolidate again before further upside. And that's typically what the markets like to do. Now let's take a look at currencies and then bring the data together for currencies, stock market, and Bitcoin. The US dollar, new, fresh 3-year low. After a roughly 2.5 month chop, we've hit a new fresh low. We haven't completely broken down from this point yet, but it looks like it's on the verge yet again, breaking past $97 for the first time since, well, 3 years ago. We haven't seen these prices since roughly February, January 2022. So you're basically coming up to 3.5 years ago. More easing for more easing on the US dollar. We're going to see, I think, other currencies continue higher, and then that's going to be better for asset prices. You're going to start to see commodities also rise. Aussie dollar heading higher, coming back up to a resistance level. The Euro and Great British Pound also heading high. You can see this thing basically blowing off, if you want to call it a blow-off top. $1 up to $1.17 now. And for the pound against the US dollar, also running pretty hot here. $1.20 up to around $1.37. Obviously all making up the US dollar index, but you can see that on their individual currencies also heading higher up into this resistance level. Okay, so where does that leave us with Bitcoin in this overall 18-year cycle? I suspect we're in this bull market phase, as we've covered many times before, looking at how you've got the bear market, the accumulation phase, and then the bull market blow-off top era. If we're in this Bitcoin bull market blow-off top era, the time frame we're looking out for is somewhere around Q4 for that top. We're looking as early as August, September, but of course, if those time frames come and go and this trend is still up, then we just keep following the trend. The interesting one here, the one point we're going to look at is the overhead logarithmic resistance for the S&P 500. So connected from the GFC top to the GFC low, two very important points. And then they're connected again in 2022 from the major bear market of 2022. So the tops are right there. We're coming up again to the high here. Should it meet this week, that's 6,300 points. But of course, it might be over the next couple of weeks that we get to that level. A breakout of that logarithmic resistance could lead to much higher prices a lot faster. And Bitcoin is also in a similar pattern here, where it has the overhead resistance. We have been following that on roughly the 7 years here. So the top, the tops, the next tops. So if we're able to break out of that, that could also be even bigger moves for Bitcoin, which has shown that it's in a much stronger position than the altcoin market at this space. But because you've been around this long in the video, hit the like and subscribing to the channel. I've got one more blow-off top market that I want to share with you that is looking stronger than Bitcoin at this stage. And no, it is not an altcoin. Now, the triple pump theory could be something similar to what we saw in the 2010 to 2013 Bitcoin bull market. Basically, it's Genesis bull market. The thing that won't happen is that you're not going to see 12 million% return. There's just not the money on the entire planet to do that. Someone can fact check me, but I doubt it. 12 million%. But the 3 pumps we're looking at is here. 1 pump, correction, 2 pumps, correction, and then the third and final pump into this top. And of course, if everything continues to line up as it does with the liquidity, the blow-off tops in the stock market, more of this cryptocurrency moving into real estate, blow-off tops in real estate, and then of course metals as well, as I'll get to, I think it might only be natural that Bitcoin really does become the star of the show yet again for the cryptocurrency market, and may in fact leave a lot of the altcoins for dead. The other theory that I've been tracking for you guys on the channel is that we run into a peak sometime, maybe it's in Q4 of 2025 or early 2026. We go on a correction, which wipes out the latecomers, and everyone stops to believe in Bitcoin again. That correction, and this is the important part, that correction would most likely last less than 12 months, but probably longer than anything we've seen previously, which then runs into another final peak, which would be part of the next cycle. But that could be quite misunderstood by the rest of the market, thinking that this thing is just going to go on forever and captures even more attention into the market. Forget the prices. We don't know what those prices are going to be yet, and we don't know exactly where this end peak is going to be. But that is definitely one theory that I think is beginning to brew a lot more for Bitcoin, considering it's able to hold these higher levels and not get sold off so hard. So it really is grinding higher with the occasional big spurt to the upside. So that's my other theory here, where we see the end of this cycle, the 4-year cycle, and the beginning of the next 4-year cycle with an early pump and then a much, much longer bear market. But this would do enough to capture the minds, the attention, the emotions of those latecomers who saw this pump. They think they've had another chance getting on board here. They run it up and then they hold on, thinking that we're getting ready for another 4-year cycle, when in fact we're probably going down for a multi-year bear market for Bitcoin, which has never happened before. And that also would time out well with the 18-year cycle, where basically everything is going to come into a major peak and collapse through the end of the decade. Sometime after 2026, we'd see that top and then basically a long collapse there. But we're not going to get too down on the game. Things are still looking relatively good here. That's in the future, but something to keep in mind because it's the macro view that I'm at least covering. Short term for BTC, haven't yet reached the overbalance in time and price that I talked about in yesterday's video, which you can find in Discord for free. It's under TIA updates. You just need to click on the link, subscribe to the email list. We have a sale going on for premium as well. So you get all of the benefits there, plus you'll also receive all of the reports, economic report, Bitcoin report, the Altcoin report that come out 3 times a week. And once you subscribe, you can go check out the free Discord where yesterday's update is located. So short-term BTC also looking pretty good. Now for the stable coins and the altcoin market, before I get to the big blow off top that's happening in metals. The dominance still rocking a hard place. You can see we're still holding up above the all-time support line here. It's been running for about 8 years. The low, the price we're looking to break down, 4.75%, still intact. The benefit to the market so far for the bulls is that we've still got lower highs and some slight lower lows on the bigger picture here. The big breakdown will come around 4.4%. That's the main one that I'm watching here for any sort of earlier signs for an altcoin season. Until that happens, there is just no liquidity. I don't understand why people keep trying to hum on about an altcoin season when this is your liquidity. This is where your money is coming from, your USDT. If it is not flowing out, then where's the money coming from? So that's one of the big ones there, and especially because it's in the game here. One other thing people point to is that the stablecoin values continue to rise. That could just mean that there is more money coming into the space, but you still need to see that money flow out into any of those assets that are essentially what you're looking to trade in order to get those big pumps up. And at the moment, USDT dominance has continued to hold up here at 4.75%. Look out for 4.4, and then look out for the big blow off move if we get a breakdown of 3.7%. That's the key one there that I'm watching for any sort of significant pumps for the rest of the market. Meanwhile, altcoins, others.d, so the others dominance chart, this is excluding the top 10, which excludes majority stablecoins, Bitcoin, ETH, Sol, XRP, you know it, is at a tied 4-year low. After 2 days up, everyone getting super excited that altcoin season was back. We are back now at the same price that we were on Sunday, 22nd of June. So 4 days later, back to that same price with the altcoins. You don't need to try and buy the low. You don't need to try and sell the top. You just need to take a chunk of profits out of the middle. If it is safer to do so, wait for the prices to go up and the trend continue to follow up. Everyone keeps trying to buy dips. And you've heard a lot of seasoned traders and investors say it doesn't need to be that way. You're not trying to catch the falling knife all the way down. A lot of people would tell you that they've made money. Some of them have, but the majority of people don't. And that's usually the reason why. They keep buying the lows and they keep buying the tops, and then the market comes down. So if you've got a stop in play, that can keep you safe. You're going to have to take a loss, but that's what the good traders tell you. If you can manage to take a loss and continue on, and you've still got some money there, that's what's going to get you through to the next winning trade. Don't bet everything on the one trade either. And total market cap, total 3, is excluding Bitcoin and ETH. Still not above 810 billion. That's the 50% level. So we're still seeing weakness across the board for these altcoins. The strong move, I still see it as being above 910 to 960 billion. So that's this 50%. And then the tops there at the 960. So the altcoin charts are basically showing you what the USDT chart is suggesting as well. The money is there. The money is not in altcoins yet. They are holding up. They haven't broken down yet, so that's a good sign there. There is the possibility that you do see this alt season, but there has not been any confirmation. So every time you get that, it's basically just that heartache for people hoping and waiting for this move to the upside. Bitcoin, triple pump theory, stock markets, new all-time highs. Real estate looks like it's got even further to go after we've discussed the new all-time highs on real estate already on the channel. Altcoins still haven't broken down. There's still a possibility. It's just taking much, much longer. People are expecting it now for the second half of 2025, quite possibly. We've talked about currencies and how that is good for the breakdown of USD, and we typically see that in the second half of the real estate cycle with the US dollar coming down. Now, metals, and the big one that is holding up better than Bitcoin at the moment, and this one is my Bitcoin versus silver chart. Bitcoin hit a new all-time high in December, and it hit a new all-time high in January, and it hit a new all-time high in May. So it broke past each of these highs at those times. So there's the December, January, and May, all going higher against the US dollar. However, against silver, it's been putting in lower highs. So it's still holding out here. It's got grinding between 2,400 and 3,500. So we've still got this winding up. If this chart goes up, Bitcoin is outpacing silver. Silver can still be going up. Bitcoin can still be going up. It can also happen in reverse. Both of them could be going down. One just less than the other. But typically, when we've seen these charts go up, Bitcoin's outpacing silver, and both, or in this case, Bitcoin is going up. But for the downside here, if this chart continues to break down or keep putting in lower highs and slowly break down, that means silver is outpacing Bitcoin. That's an important one to look at for this last stage of the cycle. If you've got some profits that you're taking, you don't know what you want to do with it, you believe that the world is coming to an end and the US dollar is going to collapse, and where else would you put your money besides the other dozen relatively strong currencies out there, and you don't have enough for real estate, you're not into the meme coins, and you think the stock market's going to collapse too, there are other things out there that we need to be watching to see if they are going to start moving. And at the moment, we're in a trading range here for Bitcoin and silver. We haven't seen any breakdowns, but we haven't seen any breakouts. So that one there is really piquing my interest here. And for silver, today was a nice update, getting above the 50%. Pre-market opens at 36.86, and it's still holding the 13-year highs. So an interesting one here, especially as gold has continued to struggle just over the last few days, but still in a very strong position overall. It just looks like it needs a bit of consolidation before another move higher. The highs here, 3,500 US an ounce. There's a sale on premium this week. Link in the video description if you want to learn more about trading and investing and how you want to trade through this final bull phase into the 18-year cycle peak and then collapse from that point. You'll also get the reports, economic report, Bitcoin report, and a whole host of masterclasses and courses to go through with TIA Premium. That's an update for today. Things are looking relatively good. I'll see you guys back here next week. Hit the like, subscribe to the channel, and have a fantastic weekend. Cheers.